Corbett Wall with DVAuction, here with your feeder flash for Monday, November the 27th, brought to you in part by Macrocin by Bimeda. Macrocin was granted the same label claims as Draxxin by the FDA with identical comparisons, except only Macrocin is made in North America. For more information, go to macrocin.com. Also, Joplin Regional Stockyards, another big sale. Despite the board crash on Friday, we have over 8,000 cattle in Joplin Regional Stockyards here on Monday for the regular Monday feeder cattle auction. Not as big of a yearling special as they had last week, of course, but they are expecting at least 50 loads of yearlings, be local yearlings there. Talked to Mark Harmon. He said the weather's been good there, just cold and clear there. So it shouldn't be a problem getting those in. Cattle shouldn't be having any bad effects from the weather or anything like that. He also said there will be a lot of weaned calves at the sale here today on Monday at Joplin Regional Stockyards. Also, they are getting ready for their big value-added special on Thursday, December the 7th. So be sure and mark your calendars for that. Black Friday. And why do we call Black Friday after Thanksgiving? Well, typically it was when the retailers, mostly your clothing retailers and things like that, they needed the Black Friday to have a lot of clearance of shelves and things to keep them in the black for the year. So, but on Black Friday, this past Friday, it was more like the Black Monday from the stock market collapse. We're just living in fear of them taking, especially the feeder cattle board down. But they can also take the live cattle board down, but especially the feeder cattle board. And they took it down $7.80 on Friday for no apparent reason other than they could. And you know, I've just every time that happens, of course, I got a lot of people that follow me. I got a lot of friends in the industry and things, and I'll get a lot of texts and things. And everybody just, you know, most of it was, WTH, but a lot of WTFs. And it was kind of everybody just completely disgusted with the feeder cattle futures. Most people wish that they would take that off the board, just do away with it. It's just a derivative of the live cattle contract anyway. Why do we even have the feeder cattle contract? And the reason that it is so shallow and is so lightly traded is the reason that they can do that. So basically you've got speculators and fund managers and things like that that are just looking to make money in your publicly traded markets, and they may not know anything about cattle, and most of them don't. Couldn't tell you which end gets up first. And but they can tell that there's more room underneath the cattle market than there is over it, and so they just come in and they just dogpile it. And you probably had a lot of producers that were taking out livestock risk protection and LRPs, and then you had your insurance companies coming in and laying that risk off on Friday morning. Your speculators, your funds knew they were going to do that, so they jumped on top of it and started dogpiling it. It triggered your algorithms, and down it went. And that's the way that goes. And if you can't understand that, it's like walking, if you're looking to get into a crap game, if you're wanting to control a crap game, let's say you got $10,000 cash, you want to go, you're not going to go to Las Vegas and walk in Caesar's Palace and think that you're going to make a big dent in anything with $10,000 cash, and it's not going to happen in Vegas because the pool's too big. That's why you don't see this happen in your Chicago Board of Trade grains, things like that are heavily traded, T-bills, money markets and things like that. People can't do it because it's not big enough. But if you've got $10,000 cash and you go on the hard side of town and you go into an alleyway behind a dumpster and there's 2 or 3 winos on their hands and knees playing craps. You show up with 10 grand, you can control that game. And you will take what little money that they have. That is what your speculators are doing in your feeder cattle contract. And, everybody says, just get rid of it, I don't know that you could get rid of it. The CME makes some money on it. They really don't like the contract because there's not enough play in it, and they're not getting enough commissions to really make it that profitable for them. But man, I assume that if everybody would quit playing it altogether, that it wouldn't, that they wouldn't keep it going. So you got to stay out of it if you don't want to. You don't want to be in it. But it just makes things so volatile. And then it does have some effect on your cash market too. So it's going to be interesting to see what happens here on Cyber Monday. So we're on Cyber Monday. So are we going to see them dump it again? It would not surprise me to see them dump it again, the limit, any more than it would to see it go up the limit. So your real-time index, of course your CME cash feeder cattle index is not up to date and current, but your real-time index is sitting about $12 over what your January feeder cattle is, and that's the spot contract. So you would think that maybe some people would look at that and they think, well, let's crank it up, and it very well could happen. But the heck of it is, we're in a bastard month now. So we lost our November feeders last week, and so we're still at the tail end of November here, but we have all of December and then all of January before that feeder cattle contract for January, our spot month, has to meet up with anything that's real. So they can just jack with it all they want to for the next month and a half, nearly 2 months. And we can't really do anything about it. They just go in there and ramrod that thing any which way that they want to do with it. And I think there ought to be some rules against that. But it's just, unless you have a big uprising, which, I doubt that we see that because their cattle people can't get together about anything. We can't get together about anything. And so I doubt that anything's going to happen. The hell of it is just stay away from it. And the reason I said it's probably so susceptible now more than it ever has been in the past, there's probably more people using risk protection now than ever. And I think a lot of them are doing it on the LRPs. But your LRPs, those insurance companies that put your LRPs out, they are definitely hedging their risk there. So they're laying that off. So it's no different than your producers laying off their risk on the feeder board itself. They're just doing it in big lump sums. And whenever they drop it on there, it makes a bigger effect. And our speculators have figured that out. But it's very, very frustrating. There should be limits on it. Your feeder cattle, your CME has put big margins that you have to put up to play on the feeder cattle board now, which that just makes it better for your big outfits, your funds, because it keeps individuals out of it because they don't want to have to put that much margin up. But it's just frustrating, and there's no real answer to it. So we'll just have to see, and we're just victims of it. We're just laying here waiting for it to happen. But by the beginning of your session on Friday, which was really a holiday and nobody was working, everybody was spending time with Thanksgiving with their families. But from the start of that session to the end of that session, your yearling feeder steers basically lost about $62 a head. Well, if you've got thousands of them, that adds up to big money. Fat steers lost about the same because they were down $4.22 for the session. So losing $60 to $65 a head in just a few hours there, it's very frustrating. Let's talk about that board for last week. December live cattle futures, Monday was down 27, Tuesday was down 47, Wednesday was down 52, Thursday it was closed for Thanksgiving, and Friday down 422 with December live cattle futures ending the week at 170 1/4, down $5.50 for the week. Ouch. February February contracts down 583 for the week at 170.97 at the end. January feeder cattle, Monday was up $1.35, but Tuesday down 152, Wednesday down $1.20, Thursday it was closed, and Friday down 780. And your January contracts ended the week at 219.30, down 920 for the week, for no reason. I mean, just big money people just playing around in the market because they can. March feeder cattle ended the week at 222.72, down 8 1/4 for the week. December corn 463 1/4 at the end of the week, down 3 3/4. January beans ended the week at 1330 3/4, down 3 1/2, or down 9 1/2, excuse me. Kansas City hard red winter wheat for December ended the week at 602, down 16 cents a bushel. Fat cattle trade through Thanksgiving, 28,500. There was a little bit of trade that we know of in the northern plains and the Midwest on Friday early. I didn't hear of any much more activity Friday late, and I can't imagine there would be after the board being down so hard. So your packers are starting this week out, traditionally one of their biggest kill weeks, because it's after the holiday, trying to catch up from that and fill their coffers up for all the demand for the holidays. They're going to want to turn the chain speeds up big time this week, and they've got no cattle to start with. So we're going to see packers come out early in the week, probably here today on Monday. They're going to want to buy cattle and take delivery of them at the same time. It just depends. The few guys that sell cattle on the spot market, if they'll play hardball and resist that, we can get some of that market position back despite what the board's doing. But the hell of it is, you know, we've always got some counter on there. So you got the basis there. Well, you sell some cattle at 178 or even 176. Well, your board's your December board's sitting at 170.25. You can pick up another $5, $6, $7, $8 right there. So, you know, nobody's got the wherewithal to resist that, to try to get the market position back. But when we lose that market position, and it's so hard to ever get it back, it takes everything down, all the way down to bottle calves at your Saturday sale barns. But fat cattle on up through Thursday, live prices in the 5-area feeding region, 174 to 178. Weighted average on live steers, 177.03, down 79 cents. Dress sales last week, 278 to 288. Not much of that 288, was mostly 280. But your weighted average on dress steers was 280.10, down $1.32. Friday, before 2 o'clock, we saw Iowa sell 4,200 head, just 13,100 head for the week. Live sales on Friday early in Iowa, 175 to 178. Dress sales from 278 to 280. Nebraska, 3,800 on Friday early, 13,100, exactly the same as Iowa for the week. That is nothing for both of those. Live prices in Nebraska, 176. Dress prices, 275 to 280. Now, there may have been some more significant trade late on Friday with the board being down so much. A lot of farmer feeders might have thought they were lucky to get the steady bids, the ones I just told you, and maybe everybody just locked up and didn't do anything. But the packers are still going to be extremely tight, especially in the southern plains where they didn't buy anything on Friday. In Kansas, 6,200 for the week. Nothing in Texas on Friday, 4,100 for the week. Box beef cutout values were a little bit higher, but not much for the week last week. Your weighted average on all of last week's sales on choice was up 96 cents compared to the previous week's weighted average at 296.65. Your late Friday sales were about $1.50 higher than that. Your select cuts, all of last week's weighted average was 269.02, up 36 cents for the week compared to the previous week's weighted average. And your late Friday sales on select were about 25 cents lower than that weighted average. But the weighted average choice select spread was $27.63, and all that based on 527 loads of holiday cuts, grinds, and trimmings for Thanksgiving week, which is pretty decent movement for the holiday week. Slaughter last week, of course it was a holiday week, 538,000. Can't really compare that with the non-holiday week before, but it was 51,000 less than the same holiday week a year ago. It's amazing how the packers just keep going and they just keep dropping the slaughter. But eventually it's got to catch up, we would think. Talk about what else is going on. Ag, you can protect your operations profitability along with limiting downside risk while facing these volatile livestock and feed markets. Navigate risk management with Ag. Talk about your feeder cattle market, your real-time index on DVAuction, based on an 800-pound cash auction steer up through the middle 12 states, ended the week at 231.64, and that was actually $6 higher than the end of the previous week. Why? Because we had lighter receipts, because a lot of sale barns were completely closed. A lot of other ones had light receipts, and some of the ones that did operate had big specials, and they had bigger strings of cattle, fancier reputation cattle, big prices, and I'm talking about like Green City, Missouri, Burwell, Nebraska, which I've always traditionally had Thanksgiving specials and 4th of July specials, which drives some of your feeder cattle contract watchers on the CME crazy, because it jacks around with your index, which they need to be driven crazy. But your cash feeders in your sale barns last week were not really well tested. Early in the week, we did see Oklahoma wheat calves sell sharply higher because they've got the wheat. I mean, it's ranked there in Oklahoma, where they had all that big rain there a couple, 3 weeks ago, and it's ready for cattle. And it's against those people's religion not to have something munching on that wheat this time of year if they've got it. So they've got to get in there, but they only want the cattle that are long time weaned and vaccinated, because they don't have 30 to 45 days to hold them up in a growing yard or a starter yard to get them started and get them straightened out and ready to turn out. Of course, at Joplin last week, they had that big yearling special, and they had, it had like 13,000 of them, and they sold sharply higher because, people wanted them. There are not many of them true yearlings around this time of year. They sold really well. But as a whole, we know that the market's got to be softer with the board being down so much on Friday. I expect a lot of your big high volume Monday sales to be sharply lower to start this week out. I'm not sure if that's going to happen on fancy calves or not, because it's time of year where people like to buy fancy calves. So if you've got strings of calves that selling in big lots that are weaned and vaccinated, I'm sure they'll sell plenty good. So let's talk about your NationalBeefWire stick out sale of the day on Friday, and it was Burwell Livestock Markets in Burwell, Nebraska. Now, they are broadcast on DVAuction. They had 6,700 there for the big special. They had nearly 1,100 5-weight steers. They averaged 540 pounds with a weighted average price of $297.53. They had over 1,400 6-weight steers, averaged 637 at $262.79 on the weighted average, and over 900 head of 7-weight steer calves in Burwell, Nebraska, averaged 726 pounds with a weighted average price of $249.12. Now on the heifers, nearly 400 4-weight heifers averaged 454 at $257.72. 587 head of 5-weight heifers averaged 544 at $245.31, and over 300 heifer calves weighing in the sixes averaged 644 with a weighted average price of $221.78. Now, I did talk to Nick Hayes at Winter Livestock Auction in Winter, South Dakota. They had a good sale on Friday too. Sold really well the calves that they had on hand, despite the board being down, and he did mention how sick of that he is. But about every week they've been selling pretty large lots of feed yard cattle that are in the feed yard and selling them to the buyers there in the auction ring at Winter Livestock Auction. On Friday, they sold 189 Charolais and red steers in the feed yard. They weighed 1054 and bring 203. And I thought that was pretty interesting information to share with you there. I also talked to Roman Schooley at Bloomfield Livestock, Bloomfield, Iowa. They had a good special too late last week there on Saturday. They sold really well. Nothing more sticking out than what we saw at Burwell and some other places. But last week, earlier in the week, they did have a replacement special on Tuesday at Bloomfield Livestock, and they did sell pairs from 3,100 to 4,100. Thought that was pretty good on cow-calf pairs. And I noticed that Eastern Missouri Livestock Commission in Bowling Green, Missouri, they had a package of bred heifers weigh 1262 and bring 3,700. Now those are extreme high stick out deals, and that's in farmer country. Farmers got money like that to spend on replacements. You go further north and west, out there in western South Dakota, like I was telling you last week, and they've got big offerings of them out there, and they're not selling nearly as high. But you know, that's just the way it is. Those ranchers out there don't have the money to spend on them like your farmers do. But your best quote that I saw anywhere late last week or over the weekend in your Macrocin no BS stick out sale of the day was Burwell Livestock Market on Friday. They actually had two. You guys can pick the best one. They sold 183 605-pound steer calves at $281. But the one I thought that was the best was 117 523-pound steers at $3.30 a pound. And that's your feeder flash for Monday.